Good afternoon, or I guess it's evening now on the Pacific Coast, but good evening. Thanks for joining us. Tonight we have Mark Sebastian from Option Pit on hand, and we're going to talk a little bit about what happened the last week or two in the market, and Mark's going to share some thoughts that he has about what occurred and some trading ideas. I want to remind everyone, though, that the presentation, even though we're going to talk about trades, is an educational presentation, and it's not intended as either trading advice, tax advice, or legal advice. And with that understanding, I'm going to hand the reins over to Mark. I see people still coming in, but I'm sure they'll catch up quick enough. So, Mark, if you're ready,
sure.
I'm going to hit the change presenter button and give you the control.
Change present away, Chris. Change present away. How's everybody doing today, guys? Doing pretty well, I hope. Do we have the recording started?
Recording is started, and
All right.
I'm going to even try to make you an organizer so that you can see the questions as they come up.
Well, today we're gonna talk about what's happening today. A lot of times I come on here and I'll pick something that's maybe a little advanced, or something that's more kind of general lessons. But with what's just happened over the last week and a half, I thought a kind of review of what has happened and what's going on and why might be interesting. And this is actually going to be very similar to what I do kind of on a daily basis. It's called the Pit Report. I do it at Option Pit. There's going to be a few little things that I do different, but today what we're going to do is discuss, we're going to talk about what just happened. I'm going to be honest, I'll tell you my mistakes that I've done over the last 2 weeks, what I got wrong, where I lost money. I'm going to give you an overview of the state of volatility in the SPX. So this is something that I do on my blog regularly, and we're going to talk about it here. I'll come up with probably one index trade that I kind of like right now. I'll discuss a little bit on the VIX, a few individual trades that I think make sense right now on individual stocks, and then I'll give you guys a wrap up on what's going forward, and then I'll take a few questions. Okay. So with that, what I want to talk about is what just happened, and not, the lesson here is not don't trade into a downgrade, because, that's not really a lesson, okay? It's not, oh, when you see us lose a couple days in a row, get out of your portfolio. Again, not really a lesson. But I want to talk to you about what kind of happened with me. And this is where I screwed up, and I think this is where a lot of people screwed up. All right. So we started trading, and you may recall I went on CNBC and basically said I think vol's going up. And I want to say it was right around here. I basically said vol is going up. All right. I slow ramping up. I was pointing out that we were hitting, as the market was rallying, volatility was hitting kind of higher highs on these dips. That was my kind of big point here. And I really thought we were going to see a nice rise in volatility into what was going on in the government debt crisis. This is Live Vol Pro. On top is S&P 500 stock price. Okay, you can see that. On the bottom is Live Vol's equivalent of the VIX. It's a blended, heavily at-the-money concentrated version of the VIX. And so you can actually see the market dropping, and you can see kind of here's last week, and then here's what we've had the last couple of days. Okay? So, and these are expirations. That's why they list the dates. So leading into this kind of rally in the market, I actually had gone into cash. almost completely. I kept Microsoft and a couple other things. And I kept short treasuries, actually. Those are the two things I kept. And then as we rallied, all right, when we got to about here on the 28th and 29th, all right, I said to myself, okay, I think what was going on here that would make things so crazy, guys? Why did I think that, why was I talking about vol going up? What was going on at the end of July that was kind of a big to-do? If you don't know this, you're one of many Americans that are not aware of current events. Yeah, it was the debt limit increase. Yes, euro is the debt ceiling increase was going on here. The euro was another issue, but yeah, we had a lot of the stuff on debt limit. Okay? Idiots in D.C. Fair enough. So we got to the 29th, and then what happened? Over the weekend, they actually got a deal done, right? Does everyone remember this? But there was worry that the Republicans in the House of Representatives were not going to pass the deal. The vote was on that Monday, and a lot of people thought during market hours that it wasn't going to pass. So as the market dropped off a little bit and vol didn't really come in, I said to myself, you know what, that makes sense. Okay? There's fear that the Republicans are gonna kind of tarp this thing, and we're going to have a major problem. All right, so then on the 2nd, what happened? Not only do the Republicans pass it, but the Senate passed it. Okay? But look at what happened to volatility. I was expecting, here's what I was expecting. I'm going to use my, one of my famous things is the paint. I was expecting vol to make a move like this. Not like this, basically flatline across. All right? And am I the only one? And the funny thing is, I kind of noticed that. I thought it was funny. But I just assumed that there was, pent-up fear from the Senate or something like that. And I just assumed that, this was just a temporary blip and that we were going to turn right back around and, buyers were going to come in and everything was going to be fine. But what happened? Vol didn't move. Then, on Friday, after the bell, we figured out what happened, didn't we? Right? We had figured out what happened. Yeah, the S&P downgrade. So what I didn't see, all right, was the S&P downgrade. Now, there's really no, I mean, there were rumors, but there's really no way to know that's going to happen, right? There just isn't. But what there is the realization that things, dates at the bottom don't match what I'm talking about. Yes, they do. Oh, don't look at these. This is not, this is just, you can see the date on, see where it says underlying right there? Those are the dates. These are just the contract months, so I can extend this out to show different time periods. So I'm actually just looking at July. So pay attention to the date here. All right. Well, and there's the point. I assumed, most people assumed that when the debt deal passed, vol was going to drop. It's just the way it was. You know, that was the general market assumptions were that maybe vol was going to tank, but we were going to get back down into that 18 level. The market's not moving. None of these moves are deserving of a VIX of 20. Somebody said, why would you assume that? So what's going on here is I actually put on a position here assuming I was going to win. I was playing the debt deal. Yeah, I think that the S&P downgrade thing was a little bit of a surprise. I'm sorry. But if you're sitting here telling me you knew the S&P was going to downgrade, you got a phone call ahead of time. All right. Now, so the issue is that I didn't take my profit here. I thought, okay, well, they must be winning on the Senate. Vol went up when the Senate passed. We actually fell on Friday, and actually, if S&P doesn't downgrade, maybe I am right. But that wasn't the case. So what I should have known, what was my mistake here? Was my mistake putting on a position into the debt, a short vol position into the debt ceiling vote? Do you guys think that that was a big mistake? No, it wasn't. But you know what my mistake was? And this is a great lesson, and it's one that I've learned. I've been, you know, it's funny. I learn it, and I get it, and then every once in a while, your own arrogance gets in your way. When the market did not do, when the market did not do what I was expecting, all right, when a measure of uncertainty, when a measure of uncertainty left, but market uncertainty didn't change, that should have been a huge sign. One that I just didn't pick up. Okay? And that was my big mistake. And the lesson here is this. If the market does something, if you put on a bet, and your bet is right, but the market doesn't react the way you're expecting to, one of the assumptions of your bet was wrong. Now, thankfully, I still had dry powder down here, and I got short vol all the way up in here. So I'm on a path to, I think I'm going to end up being in pretty good shape. But I'd really like this to get down to here before that happens. That's just the God's honest truth of how I traded last week. So hopefully some of you, I think it's good for people to hear not just that their mentors know everything that's going on, because they don't. What does my short vol trade look like? I'll talk about that in a little bit. What trades am I using? All right, well, we'll talk about that in a little bit. All right. But, I think it's just as important for you guys to hear the mistakes that we make, even very much the pros. Why didn't I lever myself up 30-1 like the geniuses at BSC? Well, I was I have, as we've gone up in here, I've put on a lot of different things. Okay, so it's been fun. So, but that said, I need vol to get down to, I need the VIX below 25 before I have a chance at making money. So, what was the best way to get short volatility? All right, well, we'll talk about that type of stuff. Okay? And just because things in backwardation doesn't mean they're going to stay that way. Okay? All right, so that's my mistakes. And now let's talk about an overview of vol and the SPX. First, let's look at the options. Okay? Now I'm just going to tell you a couple of things I like to look at. I'm looking at the money volatility. Okay? And, you know, vols are a little off because end of the day, these things really widen out. You can see one of the issues with any type of vol reading is we can actually pull up SPY. That'll probably give us a closer reading. One of the things I like about live vol, and this is one of the other issues that, you know, I've been barking about TD having problems for months, just FYI. 28, at the money vol in September is about 28.75. Okay? So I like to look at where at the money vol is, because that's really the price of the straddle. You know, the VIX is great, but this at the money vol is really where they're pricing the straddle. And it's a lot more reasonably priced than the VIX. Okay? If we're priced at 28.75, then if I take the square root of 252, 15.87, I divide 28.75 by 15.87, the at-the-money straddle is pricing in a movement of about 1.8% a day. If you look, you know, and this is the stuff that I look at, and I talked about on my blog today, optionpit.com/blog. You know, we didn't move 1.8%. Thus, for the second day in a row, and I'm going to explain what's going on here, this is the price of the option itself. Here's puts on the right, calls on the left. Here's the volatility of the strike. Here's the open interest. You can see that volatility on the strike fell a little bit. Now, when looking at skew, I use a little different indicator, but a lot of people like to look at the relationship of the 25 delta put. I look at the 10 delta put. Comes in at about 42.25. On live vol, I do just use that put. I don't try and average anything. This is 80 cents wide. This is 5 cents wide. I believe this one. And they account for their dividends. So 42.25, that makes that 10 delta put about 147% of the value of the at the money. Now, I'm sure you guys have heard of the SIBO skew index. What that attempts to do is measure kind of this at the money region versus way out of the money. Well, traders have been doing that for years. I've always been in the habit of looking at that 10 delta put ever since I worked for an SPX firm. I mean, we were a floor trading firm in the SPX. That's what I mean by that. Now, on the upside, and I know this is screwy, I actually look at the 25 delta call. And that's coming in at around 24.10. So if we take 24.10 and divide it by 28.6, that 25 delta call is trading at about 85% of at the money. So our skew curve has a relatively speaking depressed call. Why do I use 25 delta call, not 10 delta call? That is a long story. Why do I look at these two strikes? That's what I looked at when I was on the floor. That was why we looked at this stuff. What range is considered too high and too low for 10 delta put? Same question for call. Well, anything, there's no such thing as too high or too low, but there are different trades for different situations. Here's what I'll say. With that set put, with the VIX at 32, and that set put at 150%, do you think insurance is cheap, or do you think insurance is expensive? What do you think? It's expensive. Now, we get into really great detail when I'm teaching, but yeah, clearly it's expensive. And the more you look at these products, you can figure out kind of what's high and low for yourself. You don't need me to tell you. Now, I can tell you what to do with it, but no, I mean it's elevated now, and the calls are middle of the road, although vol's high. So, hopefully that answers your question there. Okay. Now let's look at term structure. All right, now we're looking at August, Sep, October, and you can see that in order to have a backward VIX curve, do you know what you need? A backward SPX curve. All right, and right now, September, at the money vol, you just look at the 120s, it's trading at like a 2.6% premium to October. That is a lot of premium. Okay? And there are things that we can do knowing this. There are some really interesting trades that you can do knowing this. All right? Now let's kind of take a look at what vol in general has done. 10-day vol, here's a 3-month chart of just vol. This red line is that 30-day normalized vol. Now let's look at what the historical volatility has been over the last 10 days. Kind of high, right? Typically, when these two cross, that means that you can expect the market to start slowing down, typically. Especially when when all of these vols get super crazy. So vol in general is pretty high. But there's one other measure I like to use that I think adds a lot of value to measure volatility. And that's kind of the high-low. And I'll use 10 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So on the third, the high of the day was 126.31. Somebody write that down. The absolute low was 110.27. So 126.31 minus 10.27, we had 16 points of movement over the last 10 days. Now, I could go through the math and do what that converts into in an implied volatility or in realized volatility, but I can tell you right now it's probably near 100. And that, so you can see SPX vol is really in an interesting spot. there are some interesting trades. One trade I really like, now that we've come back, all right, I hated this trade down here. Anybody who reads my blog knows this, but I hated iron condors down here. Even as vol, get rid of this, even as vol was kind of peaking above 36, 35, 30, 40, I was telling people new iron condors. When vol gets really big, these runbacks can be awful. Now that we've actually moved to kind of a more, let's just say, off of the absolute floor, we're probably in a position that we can set up some trades. Now I am going to use Thinkorswim here for now. I'm likely going to be joining all of my clients and migrating over to somewhere else. We'll see. I wouldn't expect any more improvements in this platform is kind of my point. That's just my opinion. But, my experience, I'm a little disappointed. And to tell you the truth, I'm a little disappointed Options Express sold themselves because they would have been in a great position here. And that's not just because I do a show for them. So we're at about 1,200. 10% out of the money is kind of 1080. That's going to be too far. But you might look at an iron condor here. I'm looking at theta, aren't I? All right, there we go. You might look at an iron condor. Okay? The 970, 960. Okay? And then possibly on the top end is where I'm more worried about the top end than the bottom end, I'll tell you. That's just me. So, we've got kind of this negative delta here. OX has a long way to go to catch up to TOS. Their new Extend platform is actually a lot better. I think you'd be surprised. And their trade support's is much better than Thinkorswim. But the fact that won't happen now that they've been bought by Schwab. So, one of the things are, Thinkorswim gives these probabilities up here. And I like to look at them. I do. But one thing you have to remember with these probabilities is that you have to take them with a grain of salt. Why is that, guys? Why do I take this with a grain of salt? And you should get out of the habit of calling it Thinkorswim. So, and I'm going to be sad that this thing doesn't get any better anymore. Yeah, based on vol changes. Yeah, they're based on current vol. Exactly. That's the big thing. As vol drops, this percentage is going to go up pretty dramatically. If we get the VIX back at 20, so I'm going to drop vol 10%. Well, guess what? 85% on this, them's not bad odds. Now, the one thing that I will point out is that unlike iron condors in kind of normal times, when you throw on a high vol iron condor, you should tighten up what you're expecting to get out of it. You should tighten up your risk parameters. And, try and be out of the trade as quickly as possible. You're, in theory, trading something that has edge. So that should be really, really interesting. That can really make your trading better. But I really like iron condors here. I don't like butterflies as much. All right, I think we have too much gamma going on. Oh, how did this trade do? Oh, nice. Yeah, this was a trade in VIX that I had, that I threw out to one of my hedge funds that I asked him to do. And, he's doing pretty good based on, this is wrong, but based on where they marked out, he did really well on this trade. Because those 35 calls, I'll show you this later. All right, we'll get back to this. So, does anybody have any questions on kind of why I like condors? You get a lot more space now than you normally would. I'm all the way up at the very top before this thing even moved on the iron condor we were setting up. All right. And I like the fact that they're short fall. And something out in October, you got a ton of space. All right. So now, let's discuss VIX. All right. Now, I'm going to teach you a little trick on VIX. And this is going to be my last complaint about Thinkorswim, because it is a good product. They don't list VIX options. They don't calculate VIX options properly, and they don't list VIX futures, which is very unfortunate. All right, so let's look at how VIX options are priced. The VIX closed at 32.85. What about Trade Monster? They don't have the VIX futures either, which is an issue that I have with them, and don't have portfolio margin. I've got a few other, although I like them, and I actually have an account with Trade Monster, one of my many. Does LiveVol calculate VIX options 100% correctly? Well, you're never going to calculate options 100% correctly, but if you look at the vols, they're usually pretty good. Now, we're in a kind of a weird thing because expiration's all screwy, because these things expire tomorrow, but you'll notice the way you can tell that vols are pretty good all right? Can everybody hear me? Okay. The way you can tell that vols are pretty good on a platform is if you pull up a product and the call vol pretty much matches the put volatility. So like let's look at the September 32 vol in TOS. One implied vol is 46.24. The other implied vol is 195.55. Anybody notice a problem with those vols? So VIX is really, VIX is really, really, really backward right now. Now, what makes VIX different from every other product? What makes VIX different from every other product? Just a bit outside. Guys, what is the difference between VIX, the one fundamental difference between VIX and everything else? Someone said based on future, it's derived based on VIX futures. Wrong, wrong, wrong. No underlying, wrong. What makes VIX so unique from every other product? We have a winner. We have a winner. Mean reverting. Mean reverting. Oh, they're both my students, of course. The VIX underlying, oil goes to 80. Can oil go to 60? Can oil go to 140? Does oil have, if you take oil, does oil have a price that it should be placed at over time? Can you tell me what the mean price of a barrel of crude is? No. Can you tell me what the mean price of the SPX is? You know, you could do some moving averages, but can you give me the mean of the SPX? Yeah, no. But what about volatility? If volatilities aren't mean reverting, then none of us have a leg to stand on when we trade. Someone said oil price is close to zero over long history. Yeah. The VIX, the underlying of the VIX. Now, the mean's actually about 20. Someone said 15 is the mean. The mean is typically about 20, if you look. The VIX is the only product where when it goes to 40, we know it's going to go back down. And when it goes to 10, we know it's going to be back up. That makes that product so distinct from every other product in the world. So right now with the VIX at 32, there are a lot of products that are interesting. You know, VXX, a lot of people like to be short. Now, it is in big time backwardation right now. What does backwardation mean? That means that right now, September futures are priced more than October futures. Okay? So what does that mean? Well, that means when vol goes up, VXX is going to outperform the VIX, and when vol goes down, VXX is going to outperform front month VIX futures, excuse me. And when vol goes down in the futures, when VIX futures go down, VXX is going to underperform. However, that will change. Right now, VXX is very expensive. But so is its vols. So for all of you traders, one thing I've been doing is selling call spreads. You know, if you've got the cash, selling calls outright is a great spread too. But I've been, you know, selling call spreads. That's been one of my trades. I've got some kind of higher, some real advanced stuff that I don't like teaching non-students of mine. But we were doing just real simple stuff, selling VIX call spreads. You know, as VXX drops back down towards 70 in vol, puts are going to make a lot of sense. Okay? And, you know, the neat thing about this product, everybody seems to have a short memory about this thing. This thing could take a dive very quickly. I'm going to pull up a 1 month chart, and then we're going to, or a 1 year chart, and then what we're going to do is zero in on Japan. When VXX caught a bid, it went from about 30 up to 30, you know, reaching a high of 39. Well, it was back below 30 and down to 26 in less than a month. So lost more than 10% in a month. And if I stretch this out a little more, it got, you know, it was darn near below 20 by the beginning of May. And back by the end of May, it had broken 20 at least once, I believe. I could be wrong. So it can take some patience, but it may make VXX make some sense. Another one that at this point may be the better play is XIV. Okay? And this is one where it's kind of had a little bit of a rough stretch. Does Fibonacci rules apply to VIX? Fibonacci rules don't apply to anything. But no, the answer is no. Fibonacci rules do not. I think that's one of the big jokes about it. But you can see that this thing is pretty cheap right here. And I think it could get from 12 to 18 in a matter of a month, month and a half, especially if vol drops. Now, I am not, before you trade any of these products, I would strongly suggest reading about them. Okay? Strongly suggest reading about them. You know, and other plays that are kind of interesting are, you know, VIX. If you look at, I'm going to pull up the vol charts. If you look at the difference between 30-day vol and 90-day vol, 90-day vol is basically at its historical level. You know, an interesting trade in VIX might be and you have to understand how the term structure works. But the SEP NOV 27 call spread. Sell SEP, buy the November. Okay? Or just a simple put spread. You know, if you think that SEP is going to drop, which I would tend to agree with you, then what about the 27-25 put spread for, well, that's a little pricey, $1.60. Where are the futures trading? Futures look like they're trading $26.90. So you've got something 60 cents in the money trading for $1.60. So $1 premium, not bad. The 24-22 put spread might make more sense, or 25-22. Costs you about $1, and you stand to make $1.50 on it that you're likely to make. It's an interesting play. You know, or a butterfly might be another play. A bearish butterfly. You know, the 25. Oh, I'm going to get all of them listed. The 25. You know, 22. 20. 15 butterfly might make some, you know, iron condor might make some sense. Yeah, someone said the problem is that the margin requirement. Yeah, well, VIX futures may actually be the better way to trade. I am not going to get into VIX futures today, guys. I'm sorry. I'm just not going to do it. Not going to do it. Quote my boy George Bush Sr. Not going to do it. All right. So now let's talk about something that I think everybody might be comfortable. A few trades in individual stocks that you'll find interesting. And this is one that I wrote up for TheStreet.com today. As you know, I am one of the head writers for their Option Profits website as well. And one of the things I was looking at, wouldn't be prudent, is volatility in Coca-Cola is insanely high. I mean, really high. I mean, even at 22.83, there's not been a point in the last year where it's been within, even into an earnings, where it's been within, let's say, we can call this, the peak of Japan is a full point below, and most earnings have been down to 18. Coke is probably going to drop to 16%. You'll be able to watch the recording. 16, I think 17%. This thing could make a lot of money quickly, and I like Coke, the stock. Not the other kind of Coke. All right? Then got kind of unfairly hammered. You can sell the September 67.5 puts at $1.60. I think that's a sale. The 62-67 put spread for over $1, I think, is a great sale. Someone said, if IV is so high, isn't there like some sort of fundamental? No, 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 no. See, that's the whole thing, is that Coke and Johnson & Johnson, you obviously missed the pit report today, Bruce, and Johnson & Johnson and, Pepsi, and, keep them coming, Kellogg's, and, somebody give me a couple other ones, IBM maybe. What are you guys noticing? These are all companies, Caterpillar, McDonald's, yeah. What is with all these companies? These are all companies that are great companies that have been rallying, that got pulled down by systemic risk. Now, the one thing that's interesting about systemic risk is that it can pull a low vol stock and make it very temporarily a high vol stock. But at the first sign of things easing up, that vol goes away, and even if there's more fear, generally the vols don't get nearly as high in these big bellwether stocks. And that is because once the market figures out what's going on, they do pick their winners and losers. Yeah, McDonald's. Are you telling me that because S&P downgraded our debt, Russians aren't going to line up for Happy Meals? Is that what you're telling me? And are you telling me that because we might end a little bit of we might enter a little bit of a rough patch, that nobody's going to take their kid to see Winnie the Pooh? Apparently nobody did take their kid to see Winnie the Pooh. No, I'm kidding. But are you telling me that no one's going to want to eat at, no one in Japan is going to eat at Kentucky Fried Chicken? You'd think that the Kentucky Fried Chicken would be the only thing safe from nuclear radiation. And, even a company like, Johnson & Johnson, are you saying that nobody is going to need to buy stuff to clean off their contact lenses just because the economy's in a little rough stretch? Or just because we had an S&P downgrade? Or we had a debt ceiling problem. No, these are all companies where the vols have been they've been dragged down with the rest of the market. And interestingly, if we sell off, you're not going to see these vols increase very much. So many opportunities. Yeah, well, this is the kind of stuff that we talk about every day in the Pit Report, and that, really in my mentoring, I teach you guys to go after. Really to search for opportunity. So, yeah, here were a few names that I was thinking. So, in summary, we've had a crazy few days. It is important to recognize when IV does not act the way we expected. I think condors look interesting, and take a look at what I call low vol stocks with high vols. And, I think, I didn't give my summation. I think that we're seeing, and you can read this on my blog, I think we're seeing lower highs and lower lows in VIX. And so I think vol may be ramping down. We may have another push in us, but I do think vol's ramping down a little bit. All right? And, that's kind of what I'm looking at today. A couple of things that I have going on, and I'm happy to. Would you roll out an iron condor, put leg in or at the money on SPX, and RUT from August expiration to SEP or OC for a little debit? It's pretty specific. I think what I might consider doing is maybe not doing the call side of that spread, and rolling out the put a little closer and doing a credit spread and trading the delta. And managing that delta. That'd probably be the way I'd approach it. So a couple things. The CBOE has asked me and Russell Rhodes. Russell Rhodes just wrote a book, and he's their CBO guy. Well, I'm kind of, I'm kind of one of the outside VIX guys. There are maybe one or two other people that get the VIX stuff as well as I do. So Russell and I are doing a class. So, Mark, since VIX is mean reverting, doesn't that mean everyone must know it's built in derivative prices? No. Because it's also an insurance product, and people are panicking. So there's always the uncertainty that it could go higher over short periods of time. So that uncertainty is something that can drive it up. You don't know exactly where it's going to go or when that time frame is. We know that in over 10 years it's going to get to that mean, but that doesn't mean that's going to stay there right now. All right, now, attend and I'll give you a $250 credit toward my Trader's Guide to Volatility class, Volume 2. Now, you'll recall that I did this Trader's Guide to Volatility last year. It was massively successful. And if you use code OC2011, Option Club 2011, I'll give you 10% off between now and September 1st. Also, if you email me, I'll send you a free copy of Expiring Monthly. So do we have any other questions? What's your email? Good question. It is right there, mark@optionpit.com. Is there a book on advanced VIX? Russell Rhodes is the only one that has written a book on VIX so far. I think it's, I wrote on the back of it. It's definitely good. I think that my four-parter that I get into is going to be more advanced than that, and probably our How to Trade the VIX is. So if you take How to Trade the VIX and that four-part course together, you're going to have a really, really strong understanding of the VIX products, all of them, including, the vol contract futures on the Merck, VIX futures, all the VIX ETNs, volatility in general. It's going to be a really, really interesting and useful course, would be my hope. Any other questions? I'd offer you the slides, but it just kind of talks about what I talked about. All right, so remember that OC 2011, 10% off of my course. If you take How to Trade the VIX, I'll give you $250 off my course. You can't use both, though. Is the vol course available for me? Of course it is. Are you talking about the course that starts 9/13? I am talking about the course that starts 9/13. That's going to be fully recordable and available for you to listen in on. All right, Chris, are you still with me here?
I'm still here, man.
$395 minus the $250, really. But you have to go and take the How to Trade the VIX course too. All right, so I'm going to have to see the receipt from How to Trade the VIX. You guys get 10% off on your own if you use OC 2011, because I always like to do good by the Option Club. All right, Chris, any kind of additional thoughts that you want to throw out there, or?
No, before we started the show, I was talking about what I was doing, which is kind of that high vol on low vol stocks approach.
Yeah. Yeah.
We don't get that many opportunities to lunch up on a lot of premium on stocks that are typically pretty well behaved.
Yeah, like Coca-Cola.
Yeah.
That was one that just keeps hitting me in the face. I actually had I had a customer fly into town for the week last week, and he sat next to me and traded next to me all week. Also available, and one of the things I had him do I didn't have him, but he and I looked at and he decided to do was he did a straddle on he did a short straddle on Coke, because Coke's range over the last year had been $8 around, so it'd been like 62 to 69 and change, and you could sell that 65 straddle at about $5. It was so incredibly overpriced. So it was real interesting.
All right, man, we just about hit our hour mark on the dot.
That's what I do.
All right. Well,
yeah, I'm gonna be in Russell Roads. I'm gonna be in Atlanta next on Monday. So if you're in the Atlanta region, come see me you can come see me live in person on at the Atlanta Option meetup. So yeah, me too. And guys, thanks again. And Chris, I can't thank you enough for having me on. It was nice to finally meet you in person back in March, and it was just such a great time. So,
well, it's always fun.
Where do you use the OC2? It's OC 2011, and you use that code when you're paying. Okay.
All right, so we'll all be volatility experts.
Yeah, that's the plan. That's the plan.
Can't be all bad, huh?
Nope, hopefully not.
Well, all right, you guys, it's 7 o'clock here on the Pacific Coast, which means it's probably a little bit after that Central Time. So, Mark, thanks for joining us.
Thank you.
And,
thanks for having me.
And thanks for the special deal. And I'm sure people will be flocking over there to take advantage of it.
Oh, I'm sure. I'm sure.
Well, I did record it, so check the video archive if you want to watch it again. And Mark, take care, and thanks again.
Thank you.
You have a good evening.
You too.